I want to get right into it here because I know you have a limited amount of time and I want to get your thoughts on this. I actually forgot about this happening this week because it's been such a non-event now for many months. But we do have the Fed and the next FOMC meeting coming up tomorrow, actually, where we'll find out if they're going to do anything with interest rates. Seems like not. I mean, they haven't for a while. And many people have been projecting not until maybe the springtime for some kind of movement. And obviously a cut is what many people are expecting by then. I'm curious to know, Frank, like, how much do you pay attention to that stuff? How much does it kind of affect your day to day in terms of investing? Obviously it is going to affect all of us and have an effect across everybody in this country, in the United States. But tell me, what are your kind of expectations, maybe not only for tomorrow, but for the next couple of months with the Fed in terms of cutting rates and just kind of your view on macroeconomics here in 2024 and how it may even pan out going into 2025?
Absolutely. So those events, they are always, it causes the market to move. Of course, that's always the circumstance around it. But like Somi likes to say, those events are already priced in. There's just a justification for it whenever it happens, right? So whenever me as an investor, I look at it, a lot of people give me a lot of, feedback and trash about being such a long-term thinker. The benefit of being such a long-term thinker is that I don't have to worry about what's FOMC, what's the date, what's the interest rate going to do, because over a 5-10 year time period, I know the only thing that's going to happen is my position is going to get more valuable. Now, of course, in the intraday, it's going to affect. You have to have some really, really, really strong conviction to be able to see your portfolio whiplash 20, 30%, right? And a lot of the things that I've noticed over the past few weeks when we started pumping was everybody likes to complain about the volatility when it's on the downside, but nobody complains about the volatility when it's going upside. All right. So you can't have both. You can't be complaining and bitching about all these things when it's on the downside, but you see your portfolio going up 30, 40, 50% in a day. Right. So you can't reap with the rewards and at the same time complain about it when it's going down. And the person who has that conviction to be able to see their portfolio whiplash that aggressively is the person who's going to win. Me, for example, I see my portfolio move 5 figures daily. Right. So
Right.
I've seen it go up tens of thousands. I've seen it go down tens of thousands. But at the end of the day, I get in it so early at the bottom that whatever it does in intraday, it doesn't really affect me because I know that I'm up, right? I'm up, whether it be 2x, 3x, whatever it may be at the current day. And if a lot of people had that same conviction, the ecosystem will eventually stabilize. And a lot of people will eventually reap the rewards of being something and finding the golden ticket that everybody searches their entire lives for. And luckily for us, we found the PulseChain Hex ecosystem. And then the people who looked into it, the people who did their research, who understood Richard Hart and what he was building, those are the people who are going to get rewarded 5-10 years from now. And a lot of people are saying it's going to be sooner. I hope it's sooner, but I'm not going to be disappointed if it doesn't do 1,000x first cycle, right? Because I'm thinking 1,000x for sure second cycle. That's how I think.
Yeah.
Let me ask you quick, and then Ewok, I want to go to you for the next question. Because you just something we bring up on this show a lot. You just kind of illustrated. Why do you think it is? And you're a bit of a seasoned investor, so that's why you have that experience, or maybe even some older folks that are in crypto have this experience too. But why do you think it is so many people in crypto? Like it's that big paradox of like, the gains come quicker in this than anything in human history. You know what I mean? It's the fastest appreciating asset that we have ever seen before. Why do you think it is that people get so impatient when you just said it yourself, you may be looking at an 8-10 year time horizon to make wealth that you never could in human history, or that it would take you 30, 40, 50 years to do. The time horizon is actually very quick for you to be able to change your life. Why is it you think that so many people get so angry, bent out of shape for not making it sooner, when if you zoom out, they're actually making it far sooner than anybody has in history? What do you think that's about?
Ewok, you want to answer that, or you want me to go?
Go ahead.
Yeah, go ahead, Frank.
No, I think it's because the generation that we live in. So if you look at the people who are mostly invested into crypto, it's a lot of people who are younger than myself, right? So I am 27 going on 28. The people who are in it, a lot of them are those, early 20s, maybe some of them teenagers, and they have what is called a microwave mentality. They want it right now. They want something instant. They want instant gratification. They've never had to work in a position in their life where it was delayed. Growing up myself, I had to delay a lot of stuff, whether it was something that I wanted, maybe I had to work for it, maybe it was a pair of shoes, maybe it was a new iPad. I had to delay that gratification. So maybe it's not the same principles of Warren Buffett, right? Because that's extreme delayed gratification. But I learned from Warren Buffett. So his philosophy and a lot of the books that he has and that I've read, I had to train myself to think that way. And once you train yourself to think that way and you compare what you have in comparison to what this best performing asset, second to crypto, would be the stock market, real estate. What for us to double what 100% return in the stock market takes 7 to 14 years. Right? We do that in a week, 2 weeks.
Right.
Right. So anybody who gets disappointed about it that it doesn't happen fast enough, is because they still treat it like a casino. They don't understand what they hold. And the beautiful thing about, from my perspective, is that I've done so many different businesses, different types of investment philosophies. I've done trading. I've leveraged trade. I mean, I've lost $100,000 clips trading FX on leverage, you know? So volatility to me isn't really a big issue, especially when I notice that I'm not realizing that loss until I actually click sell. So for me, it's just a matter of just holding on, right? But the person who hasn't lived through all of that life experience, the person who hasn't gone and lost over and over and over again and discovered, okay, what is my exit? What is the ticket to financial freedom? What type of business is it? What type of investment is it? I've done it for a decade. So when I found it, I wasn't going to let go. Now the people coming in, they haven't had that. So they just think, oh, it's a meme coin. Let me get my position and get out really quick. But they don't understand this, and all of crypto, 99.9 of it is bullshit. So if you spend the time to do a year's worth of research to understand what really crypto is and what it was designed to do and what problem it was solving, you're going to realize that what the PulseChain, Hex, and PulseX assets, those are not going to be something that's a first cycle thing or a couple months and is going to tank, right? The moment you understand, oh, okay, this is the equivalent of buying Tesla, Microsoft early on, that's when you're going to treat it significantly differently. That's when you treat it like the diamond that it is. A lot of people right now, if you think, what's the average 22-year-old kid who's holding it, they're thinking, I hate my job, I hate my life, I want my million and get out. To me, it's like, nah. If I treat this the same way I would treat a 401k, a traditional financial product, and I'm in it for 30 years, the only difference between a 401k and PulseX is the fact that I'm going to be 100 times richer in PulseX.
Yeah.
But the same delayed gratification goes in the same thing. You have to just wait. And that's why I'm a big advocate for having a job that you can tolerate, that you enjoy. So you don't have to touch your crypto assets. You just live off the revenue from your job. And then there's a lot more satisfaction knowing that you're wealthy, but you don't need to touch into it, than knowing that you're rich and you have to spend it. So I hope a lot of people understand what that means.
Yeah, I've said that a lot too, about how people, I think this cycle is going to be interesting. I think they're going to take a lot more than they really need, because they may have thought they made a mistake last time and didn't take enough. And rather than just taking a little, peeling yield, restaking, things like that, letting the price appreciate, I think it's going to happen a lot more this cycle. The next cycle, the third cycle, I think is going to be banger, because there's going to be so many people that are probably out, that are going to fly back in once they realize that they've blown everything that they took out, because they, aren't used to having those kind of gains. And it's going to just explode. That's my opinion anyway of this whole ecosystem. I think the third cycle for Hex anyway, second cycle for Pulse and PulseX are just going to be spectacular because of that. There's going to be so many people running for the door to get out, and they're gonna be really sorry that they did that. So.
And it's funny too, because you made the 401k comparison. The other big thing is you're actually allowed to touch your money if you're invested in PulseX as opposed to the 401k. So you're actually allowed to access it. But